Have you ever noticed that every time the market crashes, some people are running to sell grandma's class ring, while others are calmly buying islands? What's the secret? Why do some panic and lose everything, while others seem to print money from the chaos? The truth is, every crash in history has created more millionaires than any bull market ever did. And the one coming in 2026 could be the biggest clearance sale of your lifetime. The question is, are you going to be the guy buying the island or the guy selling the ring? If you plan on being the one buying the island, do me a favor, follow this page, smash that like button, and let me know in the comments what you think of this whole study. I've been looking deep into this, and I want to know if you're seeing what I'm seeing. Let's face it, out there, the world looks like a reality TV show that went horribly wrong. The economy is walking sideways like a drunk crab, inflation is still eating your lunch money, and the only thing rising faster than the price of avocados are interest rates. And yet, the stock market is near record highs, as if none of this even matters. This is a classic case of cognitive dissonance. We're all watching your neighbor, the one who definitely has calls from collections, buying a $20,000 sofa. It makes no sense. But here's the kicker. Markets always feel safest 1 second before they collapse. The warning signs are flashing bright neon red, but most people are too busy scrolling TikTok. But you're not going to be one of them, because what I'm about to tell you now is what the 1% do, while the 99% are panicking. This is what's called the end of the party illusion. It's that moment when the music is still loud, but the host is already mean-mugging the clock. We saw this in 2000 with the dot-com bubble, when anyone with a website about hamsters was worth billions. We saw it in 2008, when even the neighborhood dog had a subprime mortgage. And now, welcome to the absolutely everything bubble of 2026. It's not just stocks. It's bonds, real estate, crypto, fine art, classic cars. This is not a bubble in one asset class. It's a bubble in confidence in the system itself. You think this is the first time this has happened? Before 2008 and 2000, we had the Nifty 50 crash of the 70s, when people believed they could buy one-decision stocks like Polaroid and just hold them forever until they went to zero. And before that, 1929, when the shoeshine boy was giving stock tips. The pattern never changes, only the players. History leaves clues, and they are obvious. First, the grandpa knows best indicator, the one Warren Buffett uses, is screaming that stocks are more expensive than a private rocket ticket. The stock market and the real economy are completely broken. Second, the Fed. Everyone thinks when they cut rates, the party's back on. Wrong. Historically, the recession begins after they cut. The rate cut isn't the all-clear signal, it's the mayday call from the cockpit. Third, the housing market. Home prices today, adjusted for inflation, make the 2008 bubble look like a Black Friday sale. It's unsustainable. And when something can't last, it breaks. Fourth, the yield curve. The bond market, the smart money, has been screaming recession for 18 months straight. The yield curve has been inverted longer than at any time in modern history. This indicator has a perfect track record. And you think this time is different? Fifth, the final horseman, the petrodollar. The global architecture is fracturing. The 50-year deal that made the dollar king just expired. Nations are actively dumping U.S. debt and trading in other currencies. This isn't just a market cycle. It's a systemic shift. But the biggest mistake you can make isn't failing to see the crash coming. It's not knowing what to do with it. Keep watching to find out how to turn panic into profit. Here's the secret the billionaires don't post on Instagram. The best time to buy isn't when everyone's optimistic. It's when your brother-in-law is in the family text thread saying the market is over and selling everything at half price. That's when wealth is transferred. So, how do you prepare to be the buyer and not the brother-in-law? Step 1. Build your war chest now. The world's greatest investor isn't 100% in stocks.
He's sitting on a pile of cash that would make Scrooge McDuck weep with envy. Why? Because in a crash, cash isn't trash. Cash is power. It's your ammunition. And I don't mean cash stuffed in your mattress where inflation eats it alive. I mean dry powder. Short-term T-bills, high-yield savings, money market accounts. Your cash needs to be safe, liquid, and working for you. Earning interest while you wait for the blood in the streets. When prices fall, cash allows you to buy incredible companies at a 50% discount, real estate at half price, or assets that everyone else is forced to sell. Step 2, make your dream shopping list. When markets crash, they crash fast. You won't have time to research. You need to become a financial doomsday prepper. Your list is your survival kit. Look for companies with fortress balance sheets. Look for wide moats. That's the unfair advantage that protects them, like a castle. Are they anti-fragile? Do they get stronger from chaos? Or are they zombie companies, the ones that only survive because of cheap debt? The 2026 crash will be a great extinction event for the zombies. You're here to buy the apex predators. Write down the stocks, the ETFs, whatever, because when the panic starts, you'll only have time to click buy. Step 3. Be patient and a little bit psychopathic. Trying to time the exact bottom is impossible. It's a fool's errand. You don't need to. The goal isn't to be perfect, it's to be profitable. You just need to be buying when everyone else is selling. You don't dump your whole war chest in at once. That's called catching a falling knife. You dollar cost average on the way down. You buy in tranches. Markets down 20%, buy some. Down 30%, buy some more. This removes emotion and replaces it with a system. Imagine if you had bought Bitcoin at $4,000 in 2020 when everyone said it was dead. Those who had courage in the chaos changed their lives forever.
Step 4. Master your monkey mind. This is the hardest part. Fear is contagious. When your portfolio is bleeding, your brain will scream, sell, every man for himself. This is where we talk about the Minsky moment. Economist Hyman Minsky explained that stability itself creates instability. The longer things are good, the more risks people take, until the whole system is a house of cards. They leverage, they overspend, they believe this time is different. Your monkey mind is part of that system. It's designed to follow the herd. When the herd stampedes off a cliff, your brain says, that looks like a good idea. Rich investors feel fear. The difference is they build a psychological firewall. They take a deep breath and buy more. This is why the shopping list from step 2 is so critical. You're not buying the market. You're buying a piece of a specific excellent business that you researched when you were calm and rational. You are executing a pre-written plan. You are a robot, a rich robot. But what if you don't have millions? What if you only have $1,000? Does the strategy change? Absolutely not. In fact, it's better. And I'm about to prove to you why this is even more powerful for those who have less. You don't need to be a billionaire. A billionaire like Buffett has to deploy billions to move the needle. He can't buy small, fast-growing companies. You can. You are a financial ninja. You can get in and out of positions he can't even look at. During a crash, quality assets go on sale. Think about it. During the 2008 crash, a company like American Express lost 70% of its value. 70%. People thought it was finished. Buffett didn't. He invested hundreds of millions at the peak of panic. A few years later, that single decision made him billions. Think about the 2000 dot-com crash. Amazon.com, AMZN. It fell 94%. 94%. The media called it Amazon.bomb. Everyone said it was dead. But if you had done your research, you'd see it wasn't a hamster website. It had a real business, real logistics, a visionary founder. If you had put just $1,000 into it at the bottom, well, you do the math. Your job is to know the difference between a great company that's on sale and the garbage company that deserves to go to zero. So when the 2026 crash hits, and it will, you'll have two choices. You can panic, sell everything at the bottom and blame the system, or you can see the crash for what it really is. The financial reset button the world presses every decade. It's the storm that clears the air. It's the fire that burns the forest but leaves fertile soil for new growth. Those who are prepared will walk out of this stronger, richer, and freer. But preparation is now. Panic is poverty, and discipline starts today. So when the dust settles, which side will you be on? The people who acted on fear or the ones who used the strategy? Are you going to buy the island or sell the ring? What do you think about that? Let me know in the comments. And also smash that subscribe and like button. The secret petrodollar deal ended in 2024, and it's the main reason why inflation is out of control in the United States. I'll leave my latest video as a recommendation for you to understand this topic. It's yet another sign that a major crash is coming. Watch it and let me know what you think. See you next time.